Okay, just a couple things before we start here. Don't ask me how I do it. Don't ask me parameters. Don't ask me size. And don't ask me out to a cheap restaurant, please. Please. Okay, I'm looking at the euro dollar. I'm gonna start off with the euro. I'm going to go through kind of randomly pairs because I'm going to just treat this like my real life, very disorganized. So I'm going to go through like everything I see here. And I'm going to do the speed golf style of analysis where you just, if you see it, if you see something, say something, just jump right on it. I'm using this special indicator called the 100 pip uh, levels, price handles, support resistance on the banker's view of the market. Another thing I noticed, this is the weekly chart here. There's a yearly cycle. So if you split this, I don't have the 6 month, but if you split this in half, there was a trader that was talking about the almanac, and if you look at the middle of the year, you'll see there's a swing low. Now this is the same phenomena that you'll see in the if you go to the daily time frame, you'll notice the end of the month, you can get just a real, of course it's not exact because the end of the month may fall on a weekend, and you have the weekend cycles overlaying this too also. So as you come to the end of the week, since next week will be the let's see, April's going to start on a Tuesday, so that's going to throw things off a bit as far as the cycle analysis, people. Here's the 30th, it's the weekend. Get up to April 1st. So if you're going to do the cycle analysis and you're looking for an entry, there's a book by Robert Fisher where he does Fibonacci cycles. If you do a Fibonacci cycle here, now this is just the end of the week, now here's the middle of the week. So this is the typically the point of which the triple swap in Forex starts coming to play as far as when your patterns are going to meet your here's a triangle, here's the wick, your entry, because you had a buy order at this low. You're looking to buy low, sell high on the euro here for this setup. So you kind of, there's one or two really giant moves per week in a currency pair. If you go for the mid-cycle, the midweek cycle, now here it's going to be this looks like midweek, but something happens here when because the weekend's here right now. The market's closed the weekend. This is actually going to jump over here, so it's not a fair slicing. You see the space between here, it's not equal, and then when the holidays come, so the reason why you can't do linear analysis cycle wise in the markets is because the markets, there's 28 days in February, and then leap year, of course. That's going to offset all your charts. You're redoing your analysis. You can be it all night, right? You can be it all night. Like, can't believe it. Like, why isn't this market perfectly behaving? But if you look for the windows of only trading twice a week, on a 4-hour chart, I'd say that you're going to make a pile of money. You make more money than your neighbor who's cutting the other neighbor's lawn, at $5 an hour. So like stuff like this, that's just no-brainer trades. And of course, this market is accused of being the most manipulated. People I've talked to, I've been meeting a lot of traders and hearing a lot of myths, and every now and then, I guess I get a little bit carried away because I've heard it so many times. I just want to throw up. Like, I'm thinking about I'm just gonna, next time I'm on an air flight, I'm just gonna basically gather up all the vomit bags that are unused on the plane and use it for when I here's some victim-orientated loser mentality guy that wants to blame his broker. I don't even know where to start with the blaming, but you blame yourself because you look at these charts, you're looking into your belief system, you're seeing what you want to see, For me, I'm buying so much of this euro right now at this thing. I scalped this bounce into this window here. I've been accumulating as this forms the perfect wedge. Well, at least in my mind. This is just unbelievably kind of a wave four, you know. Now, in the weekly, I mean, this is the 4-hour chart, and this is plenty of. It doesn't mean that I'm going to trade it as if it's a 4-hour, like the breakout trader robot is coming in like this with the, like if you drop some kind of passive entry bot, and the entry is going to be, you know, the thing's going to put a buy order, buy stop there, buy stop there, buy stop there, buy stop there, right? Robot gets filled, robot comes in with the protection orders here, you know, you're risking this now, and then it starts to trail, right? And then you take profits. So you know, you get stopped out of this thing. You know, you're starting to buy this, right? And I just you know, get carried away in a robot thing, but right now, and just structurally speaking, I want to get in to this here, and I want to put a stop here. Now, this is the 100 handle. They couldn't get it to that. Bankers just really care about this 100 for some reason, and it's like they're yeah. So I suppose this is my belief system or my distorted view of the market here, but I'm just basing it on the fact that when you run out of buyers or sellers on any side of this game, there's either a triangle or there's a rectangle of congestion that's flat, and you know, for the overtrader, it's tough. The 4-hour chart, like I said, there's only 2 or 3 good trades a week. You have to accept that fact, and this could be a 1-hour chart, so there would be scalps on this if this is a 1-hour chart or half-hour or even a 1-minute chart. But if you're just gonna, you know, set it and forget it trading, you're gonna look for these stuff like. So I'm looking at like a month of data here. Like February is on the left. So you have the triangle here, and I would call this the scene of the crime. This is the perfect symmetrical triangle in the most manipulated market in the world. So then you find the apex of that, or the with the vector, and this is also an interesting situation where you have the classic double bottom, and you can make an argument for the top bottom here, although you scooch it down perfectly, right? So this is the entry. Yeah, this is the entry you bought here. Placed a buy limit here. Market explodes, right? Of course, you know, I don't have the left side of the chart that you base that theory on, because this probably is a pivot from way back, right? So if you zoom out, go back way, way back, and this is going to be, see, it's a pivot here, right? It's a pivot here, right? Stupid, right? So, but you're here in the, here's where you're at in the story of the euro, and there's really no need to switch time frames. If you live on a 4-hour entry and you look at a trade once a week, you have a trade, right? So there's a swing low. That's the swap coming in on the triangle. Here's another well, this would be the middle of the week, but when you, like I said, there's one good well, I guess the losers call them stop hunts. Should not coming down to this. Now, it's like I said, it's not a perfect world. This is the 27th of the month. I don't know, but that's right around there. I guess this was the exact middle. That's like Wednesday or something. So I'm going to stick with the same theory here that there's one. I'm going to actually say there's one good trade a week now, but I'd say there's two if you're going to trade the swing trade, because there's always, like, there was this one, and then there was this one. So you had this amazing, and then complete retrace, all the way back, And if you had a say a 3-day chart, I can't remember which program. I had a program that would give me a 3-day chart, a 2-day chart. It was very interesting. Amazing tops and bottoms there. Um, but looking back at this Wednesday, or this is a big clearinghouse in the middle of the week here. Kind of jumps out at you. Whatever jumps out at you, put put a thing there. Of course, this is um, since this is a weekly chart. The end of the month is not marked here. I don't have a monthly, but that's important too when all those things line up cycle-wise. So if you're planning your trade ahead, of course we have to wait for Sunday. This is going to jump over. But then, so the people that don't want to trade the open of the week because they want to wait till see the market tips its hand, and you get the so even here. Uh, there's a wick here on the these aren't candles, but this is the wick, right? That's a hammer. It's a midweek hammer. So that was the swap rollover there. So that was a nice scalp for a retrace strategy. And this is the trusty 100 pip handles. This is the 50. Baker's thinking 50. I mean the 50% retracement in Fibonacci. That's it. 50 is a 50 is a 50. I think a guy made a career on that. Now look at this amazing wick here. Now there's been a lot of pip violence in this currency pair. This was a scalp I did where I just placed kind of like a like a retarded child. I just placed an order right here, and I got picked up, and I got out, and then that happened again here. The whole time this was flirting with the. Of course, this is kind of broker dependent as far as where you put this line, because on some brokers it probably closed down here, and you didn't get filled in this one. I think at the moment this broker's on New York time. If you did the same strategy here, where you have a pending here, and you get flash filled there, and then you get out of the round, or you get out at the 50, or you just get out at the previous known. Where this is my pivot. All last week was right here. This is with the key pivot. Everything played off, as far as I could see. In Wyckoff theory, this is the redistribution phase. So Wyckoff will tell you when this trend line breaks, big markdown, then this would be like when the item is sitting in the warehouse, and this is only about I don't know, 10 hours of parked waiting at the dock, and here was the impetus for that was this, and that's why that's there. And this is just so simple, painfully simple. So my next place is when it opens up Sunday night, I'm going to buy the apex of this triangle, because this seems to be the way it rolls. This is the game plan. You look for the scene of the crime and you put your order down there. Now here you wouldn't have got filled too much. It's just not a really nice triangle down there. It's not very pretty. But this is a news event here this is how you trade the news. You would have a the news is coming out. You have a buy limit here on this previous top. I guess I'm just jumping around here, but I'm just showing how to scalp, and I'm just not a very organized person, so it's just suffer through the my tangential thinking. But no offense to the organized people, but like here's the top bottom on the 4-hour. If you had a buy limit here, of course, I guess you weren't too crazy about this. But if you had a buy limit here, waiting for the news, in fact, you had a buy limit here that you kept buy limiting, you got, like, the scalpers were, the aggressive people were considering this is a doji right here. I mean, I think this is a doji. I mean, I know this is a doji right here. Because when you see anything like this, this is a doji of some magnitude. Now the breakout traders or their robot got filled here and put a stop here. So you lost that much, right? But the guys that played the breakout trade, they put their sell stop here and they put their protection here at the last known high after this tanks. And then if their money manager came in, it would be stopped out here. That's a pretty good trade. So you risked this much to make this much. I suppose that's 3 to 1. Then when you come back in here, you got a big order cluster here. Right at the core center of the doji, you've got a buy limit. And here you got a buy limit. So you have a whole cluster. And if you're really aggressive, which I must say, that's how you make a lot of money. You put a buy limit there, and you put a buy limit here that you never got filled. And there's a little baby top in here. You can barely see it on the 1 hour. It's there when it curls like that. You have a buy limit there, right? So you have this trap, and you have a master stop, say, down here. Or this is only, because you're trying to make 300 pips, so you're going to have to put some fat stops, and I think that's 50 pips. Yeah, it's like 50 or something like that. You worry about it later, right? Wait till the blade count up. Don't worry about it. Now, a lot of people would just get out right there. That's fine. And in fact, you know, you leave a little bit on the table. So I would scalp into here. Here's the high probability scalp in this trade. I know it looks like a great move, but I think money management wise, you have to get out here on your first. In other words, once this gets once you get filled on this bank, well, this order has already got an exit. So this order's got an exit that exits up into this because this would be the first. If it's going to start going down this way, like if that was a real move, you know, that's going to start going this way. But you're just looking to capture this scalper window, and maybe you have an exit, you know, a couple exits there, but then you have an exit for one that is here, last known high, and there's the last known wick high. Now this is a perfect top bottom on wicks, but when you play top bottom on wicks, you have to be aware of the fact that the market may crush back in and do a deep retest like this. So if you're getting in on, you know, wick tops, so you have a buy limit here, you know, it crushes back into here. Whereas if you have a buy limit here based on this node, you know, you may not get filled. So you have to buy a range. You cannot buy, you know, and if you come back here and did some momentum analysis, you'd realize at this point that this market's starting to go in an acceleration of top bottom, where if you hang your trend line off that node, come to this node, you'll see it got a perfect top bottom, but it's starting to accelerate. It's like a tilted head and shoulders. So when this thing starts to leave the station, these tops become bottoms on an angle. It's starting to get a fierce. You're not even getting the linear top and bottom. See, these top bottoms don't really exist now. They're starting to accelerate, and so this is the new, and you know, even it gets steeper here on this. So as the market really starts to take off, you've got to, since these are like auto adjusting dynamic, you know, moving averages, you start to think in terms of this stuff. But now this reaches a climax here, which starts banging off the 50. You know, your first indication that something's wrong is when if you were doing you have to come up with your channel here. Okay, so you have this price pulse. You find the highest close within that price pulse is here. Okay, so you met that target. Well, the problem is when the market starts to get into tinier little itty bitty tops and bottoms. This is your first clue that it's getting a little choppy. Expect consolidation. If you try to do this style of projection analysis, another problem is if you hang your price pulse that you do know exists. This isn't like magic stuff, right? I'm not making this stuff up. You know these two bottoms exist. In fact, you know there's a doji here, right? Well, if you use this price projection pulse, and this is when you see outrageous claims of gold going to 2,500. Somebody's doing this style of analysis, right? There is a nice trend line here, right? It's going up, right? So you hang this off the highest close in there, and the guy's going to come out and he's going to say that the euro is going to some ungodly number. And this is when you know you're coming at a top, because you say to yourself, yeah, but did you look at this trend line? like, dude, man, bro, like, okay, wait, let me do the channel that's creating that price pulse. And this is when reality just, this is when you have to ask yourself, or people, I guess it's called irrational exuberance. So you're going to take a channel here and create it all the way up. So here's what the newspaper said is this projection, and then you have this one. Let me see if I can give this channel its full extension into the future of what, you know, the broader picture of the price pulse. And then I would just scooch it up on this. Let's see where I'm at. When the guy made his prediction, we were at this point. We didn't know this yet. So he makes this claim that the euro is going to here, and therefore, you know, everybody's betting the ranch, right? And I guess he could, and then that's not quite met, right? And the guy that bought here, he's like, uh-oh, tisk. And the guy that's got this channel, this is the broader channel, so this is like the stairway within the stairway. There's a node here to, you know, anchor that to. It starts to go beyond that, and I've actually seen the market break, pull back, and just go to Bonkerville. I think we've all seen that, where we can't even believe it. It's just mind-blowing, and then people have to take areas of the newspaper and say, yeah, it's because of this. Well, Christ, the market doesn't even know. The market doesn't know there's a newspaper. I mean, this is the problem with fundamental analysis, so, but you can't go there. It's just, you know, I realize that the human mind wants a reason, so I give the fundamental analysis people a break, because they're basically trying to make sense out of an explosion. Like if a plane explodes, people got to know, well, what happened? So we need a story, you know, to describe what happened. So this is the channel that is built on this, and this is, it's hitting it, it's banging, and all the scalpers jumped in on this one, and even the short, you know, that's Sunday open, or that was Friday, right? I think I sold that on a Friday. Once I don't like to hold a weekend, but it was too good to resist. Perfect channel, perfect timestamp, perfect. Then okay, so now the guy comes out of the newspaper. He says, "Oh, euro's going blah blah." Well, so the guy buys, say on a breakout, trader gets in here. Well, he's not too crazy. He's not doing too good, and then he moved to stop the break-in trail. They got stop. Now this is where the trend bots are getting their ass kicked royal, because now it's a range. This is the distribution phase, right? In Wyckoff theory, it would be accumulation, markup, reaccumulation, although it looks a little steep there. That's a very quick reaccumulation phase, and then markup again. Now we're going to reaccumulate, and there's a little bit of distribution here, because you've moved so far, you know, so there's the wave within the wave. Now this was a great entry had you had the foresight to, well, you know every top bottom on here is an entry on close, not on the wicks, because you just blow your account up, you know. Like there's a top here, so this is the top bottom from the internal structure. I mean, this thing's exploding, so it's leaving a trail. It's a natural phenomenon. It's not being manipulated. There's not like a central bank with there's not a guy in a central bank with a big knob turning it and going after your stops. It's not like that. It's a natural event. It's like if if you dropped an egg on the ground, the fractal of the way it explodes, you know. I mean, that's what you're looking at. You're just going to put you're going to put your mind into something to try to explain, well, that's fine. Yeah. So you're looking at just a natural explosion of price pulse, which would be nothing different than the irregularities that you get in an organic environment. You know, this is a natural. It's not, you know, in your mind's eye, it's up, down, and you're like, oh, I'm going to do a trade. It's going to go up, get up, down, up, down. You know, it's not like that. It's a big mess. It's a mess. It's a literally mess. And there's people that have to make a living on the market makers got to make a living, and then the trend traders got to make. So everybody's riding a train that's kind of having to take detours constantly, and it's just like, gosh, if this was a train ride, you'd never sign up for this, would you? I mean, like if you said, you're like, wait, can't we just build the track straight? The whole problem with trading is that it's not a straight road, but the turning points, the train station is here, the train station's here, so you have the triangle is the window of opportunity of which train do you want to get on, and then you have the when will the train get there, and this is the timestamp. Now, if you look at the middle of the week, now here's the node from last week. Here was the swap zone. That's the midweek. I wish I had just the midweek. So I'm sure there's some indicator out there, right? Of course, I said it's not a, like, in other words, you want to slice it too thin because you know, you got the month that you can't see the month frequency cycle overlays in here that are causing some of this, because the end of the week is not the end of the month, so I don't know where the end of the month could be here, you know. But anyways, the next, so now we're going down this channel here, but oh yeah, I forgot the news guy. So this is the problem now. So you make the failure target, comes back, now the range traders take over, and it's kind of just one of these. When you break, when you're playing pool and the balls end up near the pockets, I mean, for these guys, it's just easy, quiet pips. But when you come into this area here and everybody's projecting this and it doesn't happen, and then there's the, you know, there's a triangle in here, so that means that there's indecision and they're waiting for a decision, and for whatever case, and the volatility is dying down and the Bollinger Bands are tightening up, and there's a play that there's a style of trading that works really well there, which would be a breakout and a limit with a very tight stop. And these are the high risk, very low risk, very high reward trades, because once the people that have you know, the stop hunt or whatever, the stop orders on this one would be, they just get taken out like a dominoes. Right in here, there's a guy with a stop here, a guy with a stop here, stop, and he's, you know, he's thinking, well, you know what, I got in back here when the guy told me take this trade, and so the newspaper said that the market was going to here, and so I bought here, or maybe I bought on the breakout here, so I'm up in the trade, right, and I put a stop. Well, he probably put a stop down there. And so if you're going to play the market maker theory, when this target wasn't met and he maybe moved his stop to here, to where he got in break even. A lot of people do that. So this is the new pivot. That's why that is the new pivot. This is the way most people, I've met a lot of traders lately, and I realized that not everybody puts in a 300 pip stop like me. I have an end of the world stop because I guess my ego's too big. I know I'm right about the trade, so I'll give it up. I'll give it a nice 50 pip. But I'm trading lighter. But if you're trading 100K, you're trading 500 standard lots, and you play this top-bottom game here, right? You have your pending at the top. You're going to put a stop here, and you're going to put, you know, you're going to trail that stop. You're going to move that break even, you know, and lose that money. But I mean, you can't run it. You can't run a stop in here like a robot. You can stop out, but I mean, if you got in here, right? Of course, you have your stop here. So you got in here on your 500 standard, you know. I mean, for me, I'm getting out at the apex, of the scene of the crime of this. This is where I'm getting out here, and But you could leave a couple on the table for possible explosion here, because once you do take out this is the flip. This triangle becomes a flip zone. So then, and then here's your next entry. You know, this top becomes a bottom here. You know, bam. So, but yeah, it's that thing about, you know, this guy here gets caught up in the whole thing, and the guy that says, well, I'm going to buy the pullback, now he's carefully, you know, managing this trade. He's got the stops, and then bam, this thing cleans house, and it cleans house to here. But the guy that has a buy limit here, he gets filled on that. If he's aware of this top, he gets filled on that. He takes profits here, and then there's another chance to get in. And then, you know, so I don't know. But here, so where are we at now? There's no snow good. Hindsight's 2020, people. Told you once, told you a million times. So let's take a look at where we're at now. We're in this channel down. This 4-hour, and this is my trade next week. This is where it gets boring. I just put a buy limit here, and put a buy limit here, put a buy limit here. Just walk away. Now this is where the drinking starts. You're going to want to find a nice pub and start drinking, and then you're going to check your cell phone, and if this buy limit hasn't been filled and this buy limit hasn't been filled, they're going to twist your arm and buy at the market. Actually, I kind of get more aggressive here. I think it's Sunday and I'm going to put a buy limit there. So you start scooching these up, and these actually have a Fibonacci appearance to them, because like this would be your 50% from the center line. This is your 618. This is your extension at the 1618. You know, right? To some degree, right? But as long as you don't, like, if you have martingale entry on this, you're gonna just, if you went and got in at every 20 pip handle, unless you have a pile of money in the account, it really depends how you. If this is just a light order and this is a fat order, you know, that's the other way to play it. But yeah, so I'm buying the euro there. You know, 4-hour time frame. Don't care. I mean, just don't care about any other. Like I said, if you're going to be a trader that wants to do 2 juicy trades a week, so Sunday night, if we can come down to this, and I guess ideally this would be a triangle of some sort we're getting going here, where it's starting to get quiet, it's starting to fail to make expectations. The guy that I heard somebody make a projection down here, so I already knew that we're going to get those outlandish projections. Somebody had supposedly some banker dude with like a special commuter, and you know, I love these guys that, oh, I can't tell you I'm working for Barclays Bank, please, you know, you're killing me. Oh no, I paid $1 million for this analysis, you don't understand. You know, save that for when you're drinking at the bar and telling you all the oodles of money you make. So yeah, let me just get rid of those trend lines and go for the 100 pip handles. I'm a big believer that the banks also don't have any clue. Is you know, I mean, it's all about 100 pips, right? So we're at the 50 pip handle right now. We close right at the 50, right? And so what's next here is I want to get in below this 100. So I put a buy limit there. I'm not that patient of a trader, so sadly I'm gonna be buying about right here. You know, I have a buy limit there. Right? If I don't get filled on that, I don't really want to change time frames too much here, but there's a lot of trades on the 1-hour chart. You know, a lot more active trading here. So I guess to be a little bit more risky, I could say that there's a half-hour top bottom, a half-hour. This is a doji here. So at the center of that doji, you have a buy limit, because I do think that this thing's just ready to go on a tear. And a buy limit here, and this buy limit's here based on the 4-hour. So the reason for this order isn't because there's something in here, it's just because this is like top, bottom, bottom. I mean, these are major. This is a head and shoulders before an explosion. You know, this is the, you know, this would be your shoulder, and this is your head. Of course, you have to buy the head. I mean, you have to buy this head actually. You can see it coming. The head is dipping into this double top, and see this pivot. So this is a big deal price. And see how, if you had a pending here, and this is actually at about 3 o'clock in the morning the news came out. But if you can handle it risk-wise, I'd say just, you know, you have to have a bunch of orders in there. And each one has a different purpose. This one's like a, this one gets out up here. This one gets out up here. This one has an exit here. And there's a hard stop maybe on this whole basket. But you lay this trap, you know. And then here's your double top. Became a bottom for that scalp. Bam. But look at this, beautiful. I mean, it doesn't get more better than that. This is a hammer on the other, you know, this is definitely a hammer right here on the daily, or no, the weekly. That's a hammer on the weekly because that's a 4-hour. So if you look at the weekly, you have a top bottom right now on weekly. But see how ridiculous your order bank looks when you come like this? Now this is the weekly view. And we're coming up here. You know, this channel's in force. Of course, we're failing to make expectations on the top side of that channel if you are hanging your hat off this one. But not the same. It's a very broad channel. But there's a channel band below this that's kind of a nice place to hang this off of. If you come in here and find this top bottom and Elliott wave, this would be 1, 2, 3 is the biggest wave. So the 1, 2 part of the Elliott wave is your, see how this serves as a nice supply zone. The top of this wave, they keep tagging that on the weekly. So we're definitely up against the top, but this is kind of on a tear. So if you have like Andrew's pitchfork analysis, this would be the center of the fork, one of the tines, and then you copy this line, just keep dragging that. So you get this nice Fibonacci channel we're walking up. But it is a lumbering process, and of course here was the major top bottom on the weekly. This is a very no-brainer entry, at least you know, at least for the patient guy. This was it, you know, right here, top bottom on the weekly. And here's the possible, we may have to come back and touch this. Euro might come back here, but I'm going to play this top bottom play here. We could have a little bit of a wick. We could even have a news wick that takes us to here, but this is definitely on a the bearish argument is that we're failing to make we're running out of momentum, and now the next step here would be an up and then down walk, crash through this, and then start to take out all these major supports, and there'd be a complete you know, and lose your speak, it'd be a stop hunt down there all the way, you know, and then of course the euro goes to par, you know. But yeah, yeah, the euro, I was going to go through these other currencies, but there's no point. You know, you just trade the euro and you know, just live a quiet life, and just, you can scalp it, you can use it to make donuts. But here's my trade entry here on the hourly for my breakout. I got my breakout on this trend line finally. It seemed to take forever. It always takes forever. You know, market takes longer than you think on close. Just drawing a trend line on close. Forget the wicks, and just say no to Fibonacci. The breakout, come back, find support that level, and so my new trajectory based on the 1 hour is that we're going to start walking up this channel. And my first got our first higher close, so we've got the first breakout in price in a linear horizontal price mode, which is this one. So this is the new top bottom theory kicking in right here. Not to say this can't spike down and fill my, like these wicks here, but overall we're starting to turn to the upside, of course, for the bearish argument is that this is just simply too steep of a decline to, in other words, we're not done. And in the 4-hour view, we have not been able to get over that thing. Only on the wick basis have we been able to poke through. And this is where I have a big kind of problem with the guys that are running the analysis that has the wick as their resistance line. I find it to be a little distortion of, you could do both. So if you had your close, the strict close trend based on time, where the other view of this market is trend based on price without regard to time. We don't know what time this happened. And the problem I have with this view of the market is that when you draw your trend line like this, granted, actually, if you do both, and I don't have I wish I had a EA or a indicator that would do both. So because you can see you get a funnel formation of, in other words, this is the volatility of the market, and this is the price over time, which is a smoothed out volatility. It's a moving average of 1. That's close. But as we're poking through these wicks, these are the distribution zone or supply zone for the people selling into that. Bam, bam, bam on the clock. Of course, now this is going to, it's already broken out and pulled back for the wick analysis guys. And of course, if you have your orders at the wick, this is, this is where it closed. You want, you put the 100 pip handles in there. So you can see that you would have, if you had an order at this bottom and you had an order at the wick, see how you would have got filled on a big, you had more, you'd got 2 lots in here, and one was a scalp and one was a zoom up to here. The scalp was an exit into the last known low on close, which is right about there. So you had that scalp, you made this, and then if you held in there till a retest of this, you don't know about this happened yet, that hasn't happened yet, you would have made at least to there. And then if you had one that you just let go because you were playing the possibility you want to retest into that, and you know there's this, so what do you know and what you don't know, and then here's your bottom becomes a top on wicks, not on close. So if you had your sell pending here, you see what it got filled on your, after it came down here, it still came back up, and even here there was that failure up. And then you have to actually look at this closing price as like a moving average. So we're going up, we come back. So you want to get in here on this if you're going to be a bull. You want to get in here, and I wouldn't chase it here. I think there's definitely a pullback on Sunday coming. So, but yeah, that's the euro dollar, and it can't get more boring. But I guess I'm fascinated by the week, the midweek thing, and I'm going to look to see if I can't find something that's giving me a timestamp and have the monthly harmonics or the monthly. Of course, if the end of the week, is on the end of the month is on a weekend, I mean, it really destroys. That's why it's not a perfect mark. It's not a perfect world. You have to just kind of say, we're halfway through the week. We're coming into Thursday, and if there's a jobs report here on Thursday, there's an FP. This is prime territory for your entry for an elaborate trade plan that you set up that you just kept on. As this triangle forms and people say nothing's happening in the market, I hear this from traders, nothing's happening in the market, I go, there's something happening. And what it is well you should be doing when something's not happening is start thinking about where you're going to get in. And if you want to start placing, although I'm not a big fan of stop entry, but when market gets quiet like this, you're really risking a lot less, and you can have a bracket that, and you can see you got all the time. These are 4-hour bars, so you've literally got 8 hours. I mean, if you can't come in here and place these orders, I guess you shouldn't be trading, right? And you're stacking up your buy stops, and you're also stacking up your sell stops. Of course, you might have if you think it's going to continue this way, and your scenario out of this triangle would be this way, then yeah, maybe you got chopped up, but you made up for it because if you use this structure and you just said, well, I'm going to say we're doing this stuff. So this is a steeper decline, whatever, but you know, even the guy that has a static non-directional entry here, but he's looking to make this script written so that it risks, say, 2 to make 8 or 4, he did pretty good, you know. And certainly I'd be getting out here just for money management purposes, because this could become a range trade. This could become a new range that we're just going to go sideways, but that was quite the explosion. Anyways, I hope that doesn't help, and don't forget to dislike me at dislike.com. And that's my story, and I'm sticking to it.